we believe carriers will show reluctance and are showing reluctance to go back to the Suez routing, even if security improves. That's due to the impact that going back to the Suez causes on extra capacity in the market and the effect it has on rates, which is decreasing them. And even a reversal to the Suez routing will take at least 6 months from the point of resolution of this crisis. Spot rates will likely settle at about 1.5 to 2 times the pre-pandemic levels for the duration of this period. And we will see that contract rates will start to trend upwards based on the current BCO contract negotiations on both trades, the Trans-Pacific and Asia-Europe. And even if the crisis is resolved, as I indicated above, there will be an overcapacity and carriers will see vessels, will have vessels layups based on that. I am Catia Fernandes, head of Asia-Europe Trade and Cargo, and I'm joined by Sophie Fribourg, our VP of Global Ocean Freight. And today we'll be speaking to you about what's happening on the market in terms of demand, supply, and how carriers are reacting to this and how that impacts the rates. If you've been with us before, you know we kind of set up some housekeeping rules, and I'll just go through them. So we're running today's session as a Zoom event, as you can see, and the session will be 45 minutes. And while you can hear and see us, we cannot hear and see you. We, however, will get in touch through the Q&A function. So please submit your questions through that function in Zoom. And we will have a session at the end, 10 minutes dedicated for those question and answers. So let's get started. Yes. So as a small introduction, I'll just introduce myself and then I'll pass it to Sophie. I am Catia and I've been working for Zen Cargo for the past 3 years in the procurement department. And I develop the ocean products so that we can assist our customers in their needs. And I'm mostly focused on the trade between Asia and Europe. And Sophie, a bit of yourself?
Yeah, so I'm Sophie Fribourg, I'm French, and I'm with Zen Cargo since nearly 2 years now, in charge of global ocean freight. And I have 20 years experience in the industry, so I've seen the ups and downs in the rates, the crisis. So I've been dealing with the shipping lines. Some disappeared, some newcomers are in now. So there's a lot going on, and it's not always easy to follow what's happening on that complex environment.
Indeed.
And thanks to all of you for being here. We're very happy to share our insights and give you what is our feeling, what we think could be the post-Chinese New Year challenges for both carriers, for you shippers, and for us freight forwarders.
Yeah. Okay. So should we start with the next slide, please? And we'll just give you basically a quick overview of the most important key events. So on the Red Sea, 2 major events happened recently. So on the 18th of February, the mother vessel Rubima was the first vessel to be fully destroyed by the rebels in the Bab al-Mandab Strait. And unfortunately, after that, on the 7th of March, we had the first casualties that happened on the mother vessel True Confidence, which had 3 crew members killed. As of now, carriers have been routing through the Cape of Good Hope, and CMA was the last global carrier to announce routing around the Cape. They do occasionally have some ships going through the Suez that we've seen on Asia Med, but that's on a case-by-case basis and very sporadically. And obviously, because of these deaths, increased transit times and capacity absorption. Then in terms of the post-Chinese New Year demand, the market sentiment remains positive, and that was because businesses held back orders until factories started production again after Chinese New Year, and that was a consequence of basically prioritization of shipments pre-Chinese New Year, when there was limited space and equipment. So some of these orders got held back and are now being shipped. In terms of the capacity outlook, March indicates tighten in terms of capacity because of the blank sailings, and obviously because capacity is going around the Cape, so there's less of it. And we see certain carriers committing to also vessel delivery 6 months ahead of time to be able to cope with the lack of vessels in some of the routes. We'll take now what's happening in the market, and I'll hand over to Anne-Sophie to talk us a bit about demand.
Yeah. Catia mentioned supply and demand, and we are seeing through the years the constant irregularity between the supply and demand. But I'd like to insist on the fact that these are the main and sole levers which rule that market, basically. So if we talk about demand, what we see in 2024 is an expected increase of 2% in the container volumes. That is overall volume worldwide, without talking of a specific route. After a 2023 year where we've seen a decrease of minus 2.2%, which was, I would say, the highest decrease in volume since 2008, since the last big crisis. So the 2% is not a huge number. It is quite weak overall. Of course, we will see different numbers depending on the trades. But globally speaking, what the economic experts are saying, that there won't be any global recession. It's going to be more a soft landing than a recession. And if we talk about various markets, we'll see it on the next graph, that the US market is more sustainable than what we will see in Europe. So if we can switch to the next slide, we'll see the graph within the regions. So you see that talking about the US, we see that the US economy has so far outperformed expectations with household consumption that is very strong and dynamic and continues to be, though it's going to be, you see it on the blue numbers, a bit lower than 2023. So yes, it should slightly slow down. That is mainly due to the unfreezing of the student loan repayments, and also the decrease of course, COVID savings that were quite high in the previous years. If we talk about China, where we don't know exactly in details what's going on, but we see that the surge in demand following the reopening of the country last year was less than expected. The real estate performances and the poor stock market performance are weighing on household consumption. That is leading to deflation, and expectations for 2024, as you see, 4.7% growth is more online with the structural slowdown of the Chinese growth overall. And then if we talk about the Eurozone, we see that it is quite a weak growth for 2024, 0.6%. And if we really want to grow a bit more, then household consumption must perform. And also if we want to reach the 2024 objectives, and inflation slowdown will be crucial in Europe. So basically, overall, a weak but sustainable demand, and that depends, of course, on the various markets.
Mm-hmm. So if we move to so let's talk about also in regards to the Red Sea and the Panama issues. So we're focusing on the disruptions in the Red Sea. This has caused a record number of ships diverting around the Cape of Good Hope, as you probably know by now. That impact means that transit times have increased an average of 8% on Asia-Europe trade, North Europe specifically, 14% on the Asia-Med, and 10% on Asia to North America East Coast. There wasn't a rise in blank sailing specifically from the Red Sea disruption. It was because of other issues based on demand. And they forecast a decrease of these blank sailings in the future. And while spot rates have surged to about 2 to 3 times the previous average, the contract rates have stayed steady under their fixed allocation, but have been subject to surcharges implemented by the carriers during this period. And the estimated cost of these crises is estimated to be about $1,000 per container, and obviously the impact on the high side of the CO2 emissions as well. In the Panama Canal,
the estimate cost is per what Catia says.
Yes, not our. It's based on what they estimate. Yes, and in the Panama Canal, and Sophie.
Yeah, the Panama Canal is the other disruption we are seeing in our environment since a few months now. And it is mainly due to the dryness and the level of the water that is less and less. And that has gone down since January. So that has limited the capacity of the canal to allow ships to transit, mainly the ships going from the Far East to the US East Coast. So calling the ports on the east coast of the USA, and that is becoming quite an issue, because as of today, there are only 5 container ships which can go through the Panama Canal per day, where the normal number is around 30 vessels. So that has, of course, an impact on the transit time. The transit time have increased by 2 to 3 days. And not only that, there's of course an effect on the other ports in the USA, particularly the western coast ports like Long Beach and Vancouver, that become very congested, which brings also, as a double ripple effect, congestion on the rail going to the East Coast. And we see that also there's that shipping lines on the backhaul trades, meaning on the way back to Asia, tend to use the Cape of Good Hope rather than going back through Panama Canal. So again, quite a disruption that has some impact on the capacity of the vessels due to the longer transit time on this particular route.
Indeed. Okay.
Yeah.
So it's still talking about what's happening if we focus on the capacity deployment in the Asia-Europe. What we see is that during the past 12 months, the fleet has grown about 19%. The increase on the route is due to the addition of extra ships, which are needed to maintain weekly sailing frequency for all the loops involved that are being diverted via the Cape. And if we look at more specifics of the data, what we see is that 2M Alliance now has a market share of 33.4%. The MSC fleet basically grew and has allowed that VSA agreement with Maersk to become the biggest alliance in the trade. And MSC alone has grown 54% on their fleet in this trade, and has now a market share of 22.1%, basically taking over the position of a market leader from Maersk, which is second at 15.8%. In terms of the Ocean Alliance, the market share they have now is 33%, and they did not have many of their vessel deliveries over the last 12 months compared to M, so that has affected in a way. And the alliance, the smallest of them, has a market share of 23.3%, and they have been affected by the suspension of their service from Southeast Asia, the FE5, and that has obviously impacted them and decreased their market share and their fleet, basically. So in the next slide. So I think we talked a lot about what's happening. I think we now focus on what we believe it's going to happen in the future based on our best knowledge and predictions. We believe carriers will show reluctance and are showing reluctance to go back to the Suez routing, even if security improves. That's due to the impact that going back to the Suez causes on extra capacity in the market and the effect it has on rates, which is decreasing them. And even a reversal to the Suez routing will take at least 6 months from the point of resolution of this crisis. Spot rates will likely settle at about 1.5 to 2 times the pre-pandemic levels for the duration of this period. And we will see that contract rates will start to trend upwards based on the current BCO contract negotiations on both trades, the Trans-Pacific and Asia-Europe. And even if the crisis is resolved, as I indicated above, there will be an overcapacity and carriers will see vessels, will have vessels layups based on that.
And Catia, to talk about your point about the rates, I think we can discuss that afterwards, but we've seen the contingency surcharge and it doesn't seem to end. And we've had a lot of questions on that and questions from our current customers, and shipping lines carriers tend to absorb it in their rates so that they take benefit, I would say, of that momentum where they had been able to increase rates in quite a significant way. The other question is about environment, and not only environment. Catia mentioned overcapacity, and we will probably see in the coming weeks and months a total reshuffling of services, and we are starting to see it. So, which is of course because there's a lot of capacity. We know that there's an order book for 2024 of 7 million TEUs that will need to be absorbed by the carriers, and there's, as we saw, a weaker demand. So carriers will be willing to reorganize the services in order to get the best productivity out of it. And also the second impact for them, which is an important one, is the environment and the decarbonization that they need to perform on. So what we start to see is the carriers, especially on the Med, because the Med, some ports in the Med are very far away from the route via Good Hope, like Mersin in Turkey. All these ports on East Med are being now called by feeders, and that will happen more and more. When we check the numbers in these ports, going from Mersin to Piraeus, and then also Marseille, we see that there's a decrease of calls since the Red Sea crisis of between 30% to 70%, where they don't call anymore these ports, and there are now new transshipment hubs. Tanger being one of the one that is the most used for the time being, and it's Tanger, we know, had an exceptional and strategic location in the Mediterranean, and this is really what will be the trend, is to use these hubs to and then use feeder costs to reduce the ETS as well. That is also one of the reasons. And of course to be more more efficient. We've seen also that it starts with the north, with COSCO, which is launching a shuttle via Zeebrugge to call the Mediterranean ports. This is one of the trends that we are foreseeing, and we think that there will be more slow steaming because of the environmental issues as well. So shipping lines will probably bring their container ships at lower speed in the coming months. And the other big change that we are seeing, that we started to see, is a change in the alliances that will happen, that has started to happen, and that will continue. So if we talk about the alliances, I think it is the next slide. Thanks, Anna. This is what we're going to see in the future. So you see the carrier alliances as they are still until 2025 with 2M, Maersk and MSC. Then we have the alliance with Hapag-Lloyd, Yangmin and Hyundai, and then Ocean Alliance, OOCL, CMA, COSCO, Evergreen. So what we've seen was the creation of a new alliance between, first we've seen the divorce between MSC and Maersk, and a new alliance between Maersk and Hapag-Lloyd called the Gemini Cooperation that will start in February 2025. But probably the services will start to be reorganized as from Q4. So that's important to know when you sign agreements with shipping lines or with your partner, to know that there is a bit of uncertainty for Q4 services with the Gemini Alliance. And this alliance has we will work on a hub and spoke network, which means that they will use hubs in Europe and in China and in the Far East, and they will stop calling every port. So they will decouple origin and destination, and no more work on a point-to-point basis. They will work on a hub-to-hub basis with feeders all around. We call it the butterfly services. They think that this new approach will bring them a lower cost to serve, a better productivity, and will help them restoring their schedule reliability level. Today, the schedule reliability level across the industry is around 50%. It was about 80% before the pandemic, went down to 20% during COVID, and we are now back at 50%, which is not satisfactory. There is a lot to do in terms of efficiency and operational service level. So definitely, this is the objective of this new alliance. But there is a bit of a question mark from the industry, the market, of how it's going to operate and whether it's going to be as efficient, as productive as before the pandemic. Their objective is to get 90% schedule reliability. There's no real news on the alliance. There are rumors only. Shall we talk about rumors, Catia? I'm not sure, but we can
always
mention
like
it
rumors
afterwards. But no, the other news is that Ocean Alliance has reconducted their agreement until 2032. So we know that Ocean Alliance is a stable alliance with historical partners. There is a regularity of sailings. They have good coverage. They cover 7 major east-west trade: Asia, North Europe, Asia Med, Asia Middle East, and TP West Coast and East Coast. Well, so they reconduct their alliance. They focus on sustainability. As an example, CMA has 120 ships set to run at low carbon fuels in 2027. Evergreen as well has got a lot of ships and is investing massively. So they are really, one of their objectives is to minimize the environmental impacts. And then, the alliance. So there are 3 carriers left. Are they going to run on their own? We don't know. There are rumors saying that they might partner with MSC, but it's only a rumor, so I will not say more.
Yeah, and by the state of it, it looks like Ocean Alliance will become the leader unless something else changes, because of the basically the market share they will hold. in 2025.
So how should you prepare your tenders? How should you prepare your negotiations? So I've talked about the carrier alliances. It is very important to really understand what will be the new landscape and how it will impact your supply chain in terms of needs, in terms of where your sourcing is, because there's going to be changes. So a real study and analysis of the market is needed. It is needed to understand who will be also the shipping lines that will provide accurate information. We've seen in recent weeks that there has been a lot of issues to get accurate data on ETA of vessels, because the shipping lines are not updating their system, or when they are updating it, it's too late. So we absolutely need to focus. Certain shipping lines are doing better than others. Again, we can advise you which shipping line can give you more visibility. We know that you need to have that. You need data. You need to have data to take the right decision. Otherwise, positive business outcomes cannot come if you don't have a certain level of control of your supply chain. So definitely, this is something that is extremely important to check. And in terms of rate strategies, of course, the market is going down. The rates are going down. So you might wait to see where the market ends up. I personally don't think it can be the strategy that can be adopted by everyone, because this has a risk. If you want to mitigate your risk and gain more visibility, I think it is wiser to contract with some partners in order to mitigate your risk, secure space, and yes, get visibility on what would be your budget in the coming months. We start to see that shipping lines, we've conducted some negotiation already, and we are able to conduct long-term contracts as well as quarterly contracts. So but of course there is we need to discuss and see what could be the best solution according to your need. And again, I think partnering on a long term is always bringing more benefit than playing spot. We've seen it with our customers that had contracted long-term contracts end of the year. That has helped. The fact that they were contracted on long-term contracts has mitigated the amount of costs, PSS, contingency surcharge that they had to pay during the first months of the year. So definitely, long-term partnership is the best bet for me. And then Catia will tell you how Zencargo can even add more value to your supply chain.
Yeah, that brings me to that. So how does Zencargo add value in this context that Sophie explained? We believe that it's by working with partners to understand market movements, and we have a very wide base of partners we work with from all sorts, from specifically in this context shipping lines, but we have also other partners. It's through the experience we have with working on various types of contract models, either quarterly, index-based, short-term, and adapting that to the best or the most suitable model you need for your needs, basically. Giving you real-time visibility and tracking through our platform, which has APIs and calculates based on machine learning. It calculates the transit times, especially in times of turbulence as we're seeing. I think that's a very big value adding, and also by the full nature of our platform being able to host all the stakeholders to promote basically end-to-end visibility and collaboration. So we have both factories, the freight forwarders being us or others, and consignees all involved in a single platform for collaboration, for visibility, and that allows also you to pull reports and have access to data to help with your, for example, stock management decisions and and so on, that will help your sales and cost units. So I think those are points we can definitely help. And I think I'll just double check, but I think we will have now time for some question and answers. Yes, we're running on time. So we have a couple of questions already there, which we are happy to answer. So question number one, I think Sophie kind of answered it, but I'll go back to it. Is now the right time for tendering? And Sophie, your thoughts?
Yeah,
yes.
it is the right time. As I said, we can offer rates, and Cajas are more inclined to offer rates as from April, either for quarterly period or even longer period. So that is the right time, definitely.
Yeah.
And the BCO, some BCO, the direct customers had postponed their negotiations. And so, yeah, I would differentiate Asia, Europe, and Trans-Pacific. On Asia, Europe, most of the negotiations are done with the BCO. So, of course, then we start negotiating for the medium-sized companies. And on Trans-Pacific, the negotiations are happening now, and will start us from the rates will start us from beginning of May, either for long term or for shorter validity. But on Trans-Pacific, it's more 1-year contracts rather than there's not so many quarterly contracts.
Yeah. So actually, there's a question: are all the negotiations for BCO contracts finalized by now?
Nearly finalized on Asia, Europe, as I said, and not finalized on Trans-Pacific.
Yeah. Another question we have is like, are some carriers more interested than others in long-term strategies?
Yes, there are some. There are some carriers that are more inclined to do long-term, but that all depends on volumes, first of all. So, of course, to have a long-term contract, you need a certain volume. And we know that certain carriers are more, either they want to work more on the spot basis, and that all depends, in fact, on the level of the rates. If the spot market is high, some carriers will definitely favor the spot rates and would not entertain so many long-term contracts. Some carriers have a more long-term vision and would commit on long-term contract and still play part of their volumes on spot. They have different strategies, and there is also a differentiation between the carriers, whether they want to play on the CIF market, meaning on the prepaid market, so working on a weekly basis or really getting advantage of that market when the spot rates are high, or more building up relationship on FOB market with the European customers. So as many shipping lines we see, as many strategies we have.
And could we say as well that so the fact that some carriers are more willing to work on long-term strategies than others, there's also an element of relationship with the customer and the carrier. So
yes.
Obviously that plays a role. The better the relationship you have with that carrier, the more willing they will be there to help and to provide a long-term deal to help grow business together. So that's an element.
Definitely, I think there is a kind of understanding and I mean, shipping lines would be reluctant to do a long-term deal with a customer who would be more inclined to buy on a transactional stage, or be more willing to do the spot market. And of course they would, which means, in fact, the main criteria for a carrier is giving forecast, commit, and deliver.
Yeah.
So of course we can say that carriers commit and beginning of the year didn't really deliver, but there are there are some events that are beyond control, but commitment, delivery, and volume are key for long-term contracts.
Yeah.
But of course, I mean, playing on the spot market is also another option that can help benefiting of the low rates when they are on the market.
Yeah, indeed. And an interesting one, do you think carriers will go back to the higher service level KPIs? And I understand by that they mean probably the
schedule reliability.
Yeah, schedule reliability.
That's, as I say, that's the aim of Maersk and Hapag-Lloyd, is to go back to the. I think they are really willing to operate in a different way, because they've seen these last years that they really struggled, and that's why I think they are now trying to reshuffle services and maybe go to different models with more hubs rather than touching every port of call like they used to do before, when they were advertising on this what was it called, the Daily 7, I think, where they were calling every port in China once a day, which is not sustainable today. So they have to adapt to the new environment in order to go back to better service levels.
I think so we've had all these questions. If there's any more last minute ones, let me just double check. No, seems like that was the rush of them. So yes, so basically, if we're getting towards the end, but if you would like to find out more about how you can tailor-made your rate strategies, please reach out through our Get Started page. You have the QR code there. If you want to take a short picture, we give you a couple of seconds for that. But thank you for attending. We hope you have enjoyed our content, have learned a bit more, and helped to make some decisions for the coming future. Any last words on Sophie before we?
No, we remain at your disposal. I mean, market is hectic, but that doesn't change so much. So we are here to help and advise you, and we would be very happy to understand your needs and be able to build up a proper solution for you.
Yes.
Thank you very much.
See you in our next future webinars, hopefully, and have a good afternoon, everyone.